Good morning, everybody. It's Monday, September 16th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had December corn down 2 1/4 at 4.11. November soybeans were down 1 3/4 at 10.04 1/2, and December Chicago wheat was down 8 1/2 at 5.86 1/4. This morning, the USDA had a sales announcement of 132,000 metric tons of soybeans to unknown destinations for 24. Good morning, guys. Hope everybody had a nice weekend. We were talking here just a little bit before the show, looking at commitment of traders that came out there on Friday. Buying across the board, really significantly in corn, certainly in soybeans as well. They've trimmed their short position quite substantially from July. They bought another 41,000 contracts of corn. That's makes them short 147,000, which is the smallest since the last week of May. And they also were buyers of 26,000 beans and 13,000 SRW. So with that, Dustin, maybe a few thoughts. One thing also to note, corn open interest from Friday was up 22,280. So that's kind of an interesting thing, seeing how we closed there on Friday as well. So what's your thoughts?
Thanks, Dan. Yeah, open interest going up when prices are rising is definitely a positive thing. If you had kind of just look at that and nothing about the fact that we're just getting into what looks to be a record harvest, you'd say that's positive on its own. I still think we have a wall of corn that, is probably going to try to find a spot. So we have to keep that in mind as we're talking this way. But, definitely some positive indications right now. Commitment of traders is always in the rears. So we got it as of Tuesday, to see what this positive open interest build is. We have to see which participants are involved in it. But we've got spread narrowing, prices rising, highest price since July for corn on settlement on Friday, highest price since July 11th for wheat. A lot of geopolitical conflict going on in the Black Sea region still. KC wheat testing above $6 again. Taking just a quick look outside of what appears to be a record yield in the U.S., we did have pretty low acres, and we have fairly low global stocks right now when you exclude the Chinese numbers. So I can be convinced of anything here. I mean, if we end up at a 180 yield because we finished off dry and Iowa, Illinois is good, but subtle things that don't really show up, like not as much fungicide. Fungicide invested this year, that $30 or plus an acre might have been hard to justify, with prices sub $4 cash. So if little things like that add up to, not a huge trendline yield beat, or maybe even, rate at trendline or slightly below, yeah, we'll still be kind of tight. The story will still have to, kind of unfold for how supply and demand is going to match up for the next 12 months. So I don't want to necessarily just put a blanket record yields in Iowa and Illinois is going to be bearish. That's where I would be leaning, just because we've heard some really stellar early yield results in these areas. But there's a lot of a lot of areas that corn's grown. And once we add up the holes in Minnesota, see what kind of hail damage in Nebraska, how that impacted things, and see where, Ohio and Indiana end up, maybe it's not, a completely bearish story in the end. I still think there's a lot of demand that will come, between now and when we finish this crop year in September next year.
Sure. And then our next, we'll obviously start getting more anecdotal yield data here. I know guys in northwest part of Illinois and stuff are going to be rocking and rolling this week. Weather looks fantastic, mid 80s and sun every day. So this crop's drying down quick. But then that next report, we should see some more tangible data that will get us, it feels like we're narrowing that gap pretty good in terms of where we're at from a yield perspective. When you say, Dustin?
Yeah. So like there's like that objective yield data, I think, is where a lot of the support came from, is when people started getting into that executive summary and seeing of the objective yield data, which really is not that comprehensive, if you look at the total number of samples, but it is important to look at. They had fairly high test weight. Your ears versus weight suggests that, well, it wouldn't be that unbelievable to see them start coming down when as we get into a drier situation here. So there's like kind of twofold here. Like the faster we dry down, the faster harvest is going to build up to that gut slot of harvest. And we also have the river levels. Brian pointed out this morning before we got on, river levels are expected to drop quite substantially here. We did get a little bit of boost from that hurricane, but the forecast is going right back down to almost -10, as of September 30th. So that's an interesting situation, because we're lack of demand from higher freight costs is certainly going to have an impact on the spreads. And D's to March has narrowed in all the way into sub 18 cents again. Last year it was 2,600 when we finished up in late November there. We were very low then as well, so river levels probably had an impact at that time. We think a lot of it was all those basis only contracts and DP contracts that hit the market right at the end of November that finally got that spread to widen. In our opinion, we think the market's going to be quicker to sell, because people don't want to get stuck in DP again. They don't want to get stuck long basis only and then have a situation where prices continue to fall on them. That recency bias, we believe at least, will be make growers quicker to make that sale, and then that would in turn be potentially quicker to see that spread widen as well.
Yeah, I was going to ask you too, Brian. What are you seeing on the basis front? Obviously, we're coming into harvest and glut slot, but we've heard stories of elevators, being reluctant to even take new corn in for the next couple of weeks as they're working through old corn. I mean, are you seeing some of that loosen up at all, or?
Yeah, for sure. You need, like Dustin was saying, you need this rain to the north, and we're like in a high pressure system right now. We're looking to be pretty dry for the 6 to 10. So, just talking to a few growers on that using the river terminals in the St. Louis area, basis is starting to widen. Like you said, some elevators aren't even taking new crop corn because there's an old crop still coming into the market, which is crazy. So it looks like not until like the last week of September will they start taking some new crop corn. So I think, if you do have some premium contracts on the books, if you need that cash on hand, I'd be start looking for basis. So if you want to reach out to us, we can look in your area, but something you might want to do, because rolling it, it's great. There's a pretty decent carry, but interest is going to eat up at that. So I would kind of look to price as many of those premium contracts on the books that you can.
No, very good. Thanks, Bry.
Yeah.
Ryland, I was looking this morning. So last week, cattle slaughter up 14.4%. Pork production was up 10.5%, and slaughter was also up 10.5%. What's your thoughts as we start the week here in the cattle market?
Yeah, it looks like Packers had some margin to throw around, so they really came after the kill pretty hard. So I think overall cash did not perform that great, just considering the higher kills. So we're seeing generally the South trading at 180 to 181, dress 290 to 294 in the North. So overall, just kind of felt like the steady kind of maybe even a little bit lower of a trade. And meanwhile, the beef market still continues to erode. So I think margin's going to be kind of the big factor here as to if we can keep those kills up, but they're likely to start to fall back, I'd imagine, this week, but we shall see. We got the cattle on feed report on Friday. So I think just overall, the market's just going to be kind of watching for early cash indications, probably even see some, maybe some light liquidation. So we tend to stay a little bit on the cautious side going into these, especially expecting placements to start to rise again over above a year ago levels. I think right now the average analyst is probably going to be looking for something steady, but I think just like erring on the side of caution, going to create a little bit of two-sided trade this week. So we're going to be watching for that and give you some updates on the on those estimates as they come, likely by Wednesday or Thursday. On the hog side of the market, managed money's started to reduce their position. We've been on this steady break. Cash and cutout have just been kind of leading the charge here, just kind of drifting lower. So overall, kind of feels like waiting to see what cash does this week. But overall, it just, you know, there doesn't seem to be a lot of hope right now in terms of really getting prices a lot higher. Maybe we get some kind of rise here before the end of the year, maybe some even short covering kind of bounce. But on the fundamental side of things, it still looks pretty weak. So we'd manage money cutting back about 1348 as far as their total length, coming in at 37,712. So, I mean, I would expect that number to keep on coming down here. There just doesn't look to be any real good news right now from the fundamental side of things. So maybe we'll get some better news on the export market. But for right now, we're coming into the week pretty on the weaker side of cash.
Oh, very good. Appreciate the update. We'll take a look at those estimates, as you said, later later in the week here for cattle on feed. Other things to note, we will have NOPA crush out at 11 o'clock Central today. They're looking for a number close to 171.3 million bushels there. So we will we'll keep an eye on that and talk about that in our afternoon commentaries, and then certainly on the War Room tomorrow. Also at 3 o'clock this afternoon, we will get a harvest update and crop conditions report. That'll be 3 p.m. Central. Once again, we'll discuss that tomorrow morning as well. If you enjoy the show as much as we like putting it on, throw us a like or subscribe. Doesn't cost you anything to do so. Certainly helps us and will keep you up to speed on everything AgYield. So throw us a like or subscribe. And thanks to everybody that tunes in on a daily basis. We certainly appreciate that. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments there this morning, guys. It was a good conversation. Hope everybody has a real good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.